the extremely huge industry of retirement investing in general, which is, by the way, a $40 trillion pool of investor money.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Kaaren Hall. Kaaren is the CEO of uDirect IRA Services. She has a long, impressive bio here, and I, as I mentioned before we started recording, I'm going to let you tell your story, Kaaren. But before we do that, I just want to say thank you for coming on the show today, taking the time to come and share your story. And as I also mentioned, I have a lot of questions for you, so hopefully you'll entertain them. But thank you for coming and taking the time out this afternoon.
Well, it's really a pleasure, Jason. I appreciate you asking me. I think this is a topic that a lot of people would like to know more about.
Yeah.
Because raising capital is a thing, right? I mean, it's what we're doing now.
Yeah, exactly. It's I think a question both on the capital raiser side, but also people that you're talking to and people don't know kind of the options that are available to them. So, but before we dive into kind of all the nuts and bolts, I'd just love to hear kind of your background, your story, how you got to where you are today, and then we'll go from there.
It's a circuitous route, that's for sure. Well, I started in college and I was a radio announcer, right? So I did this for 17 years and then made the logical transition into real estate, right?
Yeah.
And started doing some property management on the side and then got a real estate license and did that for a year. I was a realtor for a year. And then I started doing other things. I got into mortgage loan servicing and I was there for quite some time. We called it cleaning up after the elephant. and did that and got into mortgage loan origination. And in origination, I learned a tremendous amount, not just about, the jargon and the mechanics of mortgage lending, but just the power of what a tool like a mortgage loan could do for people, for like consolidating their debt, for example. And it just really spurred me on. That's when I read Think and Grow Rich, and my horizon just expanded, like what's possible. And then in 2007, I got into the self-directed IRA space, working for another company. And then two years into that, I opened my own, which is uDirect IRA Services. So we're celebrating our 14th year.
Congratulations on that. I would say those are notable dates or notable years in the economic cycle. So you were working for someone else in 2007, went out on your own 2 years later. So what did, I guess maybe, we sort of start just by letting the listeners know, what do you mean by self-directed IRA? What is that kind of really at a basic level? What does that include? And then we'll get into kind of the rest and like all the different uses and things like that.
Well, an IRA is an individual retirement arrangement, and ever since they've been around, which is 1975, you've been able to invest in anything except life insurance contracts and collectibles. So an IRA has always been able to invest in private equity and precious metals and all these different kinds of asset classes. But it really didn't come to the forefront, I think, maybe until the Great Recession, when people were looking for capital. But an IRA is an IRA, to answer your question, and has always been able to hold all kinds of assets. So what makes it self-directed is just the asset that the plan is holding. So the rules for a self-directed IRA are the exact same rules for any other IRA: how the money comes in, contribution limits, how the money goes out, RMDs, which is required minimum distributions, the taxation, everything is exactly the same. It's an IRA that's allowed to invest in alternative assets. That's a self-directed IRA.
Okay. Why would someone, like, I think
I guess maybe my real question is why is it not more widely known about self-directed IRAs? Why are so many people, when you think about an IRA, they're opening one with one of the big brokerages, they're only investing in stocks, and frankly, I think most people don't know that there are other options. So if it's the same and they've been around, like why would I guess one subset of people been sort of learned about it and another subset didn't? Like what's the differences in terms of why it's not more widespread?
Well, I think because we're busy doing our jobs. And when we're doing our jobs, we're thinking about our space and what we do. And so part of that space may not be retirement saving, right, for most people. So you maybe have a 401k or 403b, 457 where you work, and it's like, okay, that's retirement money, and you're not really thinking about the assets that those plans are holding because you're busy with your life and doing your job. But then as you grow and you start thinking, well, how can I really build this? How can I become wealthy? And you start learning about wealth creation and you start learning about alternative assets. And I think that people, go to meetup groups and they'll learn about, hey, I can invest in private equity. I can invest in all these different asset classes. And once it hits them that they've got a choice, that's when they understand the self-directed IRA because it comes right into play at that time. But we're just not taught. I mean, the self-directed IRA industry is pretty minuscule compared to the extremely huge industry of retirement investing in general, which is, by the way, a $40 trillion pool of investor money. So it's a lot of money. But only about 3 or 4% of it is self-directed. So that's probably why, I would think.
Okay. Those numbers are very eye-opening. I guess I didn't realize quite that, I guess, discrepancy between the two, that there was that much money, sort of within the retirement industry, and then only 3 or 4% was in the self-directed IRAs. Now, is there, and this is maybe where some of the questions that I have, I don't know if they're going to be something that you deal with or what, but I know with 401ks, and we can get into this if you want to, there are a lot of sort of rules around the accessibility of that money. It might be your money, you're contributing, you might be getting a match from your employer, but there's a lot of rules about what you can do with that money. That's not the same with IRA, right? To my understanding, you kind of, it doesn't get sort of locked up by anybody as far as I understand.
I see. In that regard, there are a lot of rules. And we can simplify this, but with ERISA plans, that is what we call a plan that is for a company with employees. There are certain rules, right? Because the employer is going to have a plan document and it's going to stipulate what you can and can't do. In other words, if you wanted to move the money from a current employer into an IRA, you might not be able to do that. You might have to wait until you're no longer in service of the company and then ask for what's called an in-service rollover and take that money that way. Yeah. And you're right, in that sense, it's restricted. But just like 401ks and 403bs, the IRA also has a lot of rules about taxation and penalties when you can have the money. And as you say, it's always your money. You can always take it out, but maybe with taxes and penalties. But the rules are very much, they're more the same than they are different.
And yeah, and that's actually a great point. I wasn't, although I recognize that there are taxes and penalties if you take them out, sort of on an age-related situation. But I guess maybe I'll just tell you sort of what I've experienced, and
sure.
Because for myself, I left the job as I left a full-time job, had a 401k. There were a couple of things that sort of, I guess my eyes were opened related to that 401k when I left the job. One was whatever the employer plan was, and I'm probably not going to explain this well for people, but I'll try. It's a large company. There are different levels of income within that company. And because of that discrepancy in income, the higher earners were limited in the amount they could contribute to the 401k. So,
oh, right.
Limited more so than just what the federal government mandates, whatever that annual maximum is. it was limited even further because there had to be some I don't know, level. Yeah, essentially across all employees with the company. What I have since learned is that's just the company's choice not to, I guess, pay a little extra money to have the plan where anybody can contribute to the maximum. So I think that's one thing that's maybe missed, that people just don't know when they're have a 401k with a company. The other thing is I left that company, my full-time status. I agreed to stay on and potentially do, sort of relief or part-time here and there if they needed. But what that also did is it kept my 401k locked up. I couldn't take that 401k. I couldn't contribute to it. Nothing. All that was happening was it was getting charged fees, but I couldn't move it anywhere else unless I completely terminated my employment there. And so these are things that, because of my own experiences and my own, I guess, desire to roll that money into a self-directed account, I learned things that I think probably a lot of us, I didn't know previously. A lot of us don't know about that whole system. And it's like, for me, the more I learn about it, the less I like the idea of a 401k. But an IRA, even if it's not, sort of, as we say, self-directed, that money you can move it, right? You can, if you have an IRA, you can take the money from your IRA and move it to a self-directed IRA and invest it in alternative assets like we're talking about.
Exactly. Yeah, you do have freedom in that regard as far as the movement of your funds. Absolutely. And you do have more control over the assets you can actually invest in. A lot of times the plans will give you like a cafeteria plan, or they'll choose certain assets and you can pick from those. That happens too with employer plans. But self-directed, I mean, the door's wide open because an IRA, a typical IRA, can invest in any stock, bond, or mutual fund or CD. And then when you get into self-directed IRAs again, those horizons expand to alternative assets. And so many of those assets have to do with real estate. So I think that in 2007 to 2009 and beyond, real estate was at such just a bargain basement level. People were buying real estate on tapes, right? They're buying massive properties at a time. We're not doing that today, but we were doing it then. And that's when self-directed IRAs came into the public eye, because there were so many alternative assets for sale. And if you didn't have the cash, you probably had an old 401k and you could move the money over and acquire that asset. But we're busier than ever, even though a lot of people aren't investing in brick and mortar like they used to.
Yeah. And I'm glad you sort of said that again, is just the fact that we're busy. People are at their jobs. There's the knowledge about this stuff. It's not, I don't think there's any reason anymore to say like, oh, I didn't know, or that you couldn't know, right? The information is so readily available, whether it be on the on the internet, on podcasts, on social media. It's out there. It's available, books, however you want to access it. But I do think it's like at some point we as individuals reach sort of the end of our bandwidth, and how much can I learn? But I think too many people take their own, sort of financial health and push that as one of the things they're not going to focus on. And so they don't know about a lot of this stuff. And again, I've been there. So maybe you can tell us a bit about what, we talked about alternative assets mainly being real estate, but how would someone, if they wanted to work with you, they wanted to open a self-directed IRA, what would that process look like for them? What would the steps be for them to go through?
Right. It's a very easy process to actually self-direct. It's just not difficult at all. You open an account, very simple. You provide a few documents like a copy of your driver's license for the Patriot Act. Then you fund the account either by contributing, by doing an IRA to IRA transfer, or doing a rollover of a previous employer plan. So open, fund, and then you invest. So typically, when someone's going to invest with a self-directed IRA or use one, they usually have the asset in mind, because understand when you open a self-directed IRA, it's held there and the money is not at risk in the market, but it's not earning a tremendous amount of interest either. So people will open their account with an asset in mind, typically. So usually you're finding the asset first, then opening the self-directed IRA to acquire that asset. So what it really means is before you start self-directing, you want to become familiar with various kinds of alternative assets. And there are so many ways, like you said, I mean, gosh, we've got YouTube and whatever the internet, if you want to learn about a certain asset class, you can. So many meetup groups to go learn and talk to other people, learn from their experience. How do you do this? Like, how do I do seller financing? How does my IRA buy an option in real estate? How can my IRA be the bank and lend money? Things, different assets like that. How can my IRA buy performing and non-performing debt? How can my IRA invest in tax liens? It's a whole, so you want to learn about the asset first, because before you use your retirement money, that's so hard to save because got contribution caps, right? And before you invest that money, you really want to understand the underlying asset, because once the money goes into a self-directed IRA, it isn't invested or growing until you've chosen the asset. So really the first step, opening the account's the easy part. It's doing the due diligence on the asset itself is, where the work comes in.
Yeah, no, that's a great point. I think it makes it, and I guess this is true I'll tell this story because this relates to what you just said. When I first, this is, I don't know, 20 years ago, when I first opened an IRA, I opened an IRA because my accountant was doing my taxes, and they were like, do you have a 401k where you work? I said, I don't. They said, you should open an IRA. It will help you with direct tax savings. You can contribute, I think it was at the time, $5,000 per year. It's a direct reduction of your tax bills. Like, okay, great, I'll do that. So I opened it, and I did that 2 years in a row, and I put the maximum in there, and then that accountant never told me I had to invest that money. So for I think it was 10 years that money just literally just sat there in an account doing nothing. I didn't invest it. I didn't know what I didn't know. And so I think that to me, that's a lot of what this, having you on today is really important for, is for people to understand what's available to them, what, even if it had been in stocks and just sort of the traditional treatment of, what people think mainly of IRA, I should have done something with it, right? It should have been invested in some way. So I think
you didn't lose money. Okay. So that's good.
That's true. That's true. I didn't lose any money, but yeah, you're right that in a lot of ways it does, you need to have the asset in mind, maybe not the minute you open the account, but be looking for ways for your money to work for you. I think it's just a good take-home point in terms of whether it's in an IRA, whether it's even just in the bank, right? You want to be looking for ways to make your money grow and not just sit there.
You do. I think you have to identify as an investor. Like, I am an investor, and you start there. Okay, you're an investor. What do you invest in? I don't know. What do I like? Well, what can I invest in? And you start this exploration and a learning curve. And you're right. And so that's why uDirect, I have a second company. It's called OCREIA, Orange County Real Estate Investors Association. And so through OCREIA, we don't sell any assets, but what we do is bring somebody on every month for the last 11 years that teaches some aspect of real estate investing, so that our members and the general public, because it's free to join the Zoom call, now that we've been doing that since 2020. You can join OCREIA and listen and learn right there. And there are just a lot of podcasts like what you're doing right here, where you can get this kind of information.
Yeah, it's pretty readily available at this point. And so if you're not focused on, taking some time to dedicate towards, sort of how to improve your financial situation, it's no longer just that it's inaccessible information. It's just that you're just really choosing not to make that decision about, sort of finding out what options you have. And as you said, yeah, there's so many different things that you can do. I do want to back up. I think sorry, I got excited about asking questions, and I want to back up to, kind of that time when you went out on your own and started your business. And obviously it was around the real estate crash in 2008. So I think that's a big step. That's a kind of a bold move. How did you, what was your, thought process with that? What was your mindset at that time? Tell us a little bit about that transition.
It was a rocky transition. I've been in real estate and radio and mortgage and living in Orange County. I think, you're in LA. In Orange County, there's not a lot of radio. It's in LA. So I wasn't going to do that. I wasn't going to be a mortgage person during the Great Meltdown or a realtor or anything like that. So that was out. And then I happened to, get connected with some people that owned a self-directed IRA company. So after working there for a couple of years, we parted ways, and I just bootleg this, or wouldn't bootleg, bootstrap. That's what I would say. Mm-hmm. Bootstrap this company from just, a blonde and a laptop, to what we have now. And it was just because of some really amazing people who supported me, the owners of the real estate investment clubs, and I just received so much support. And I was going from I put on 100,000 miles on my car, in the first couple of years. It was crazy, driving everywhere to speak at any event that I could, and in that way built a base of people who needed to know about this, and a lot of friends along the way too. And so it was a tremendous amount of hard work and late nights and all that, but it worked, and 14 years later, it's a little easier to do this. We got the plane off the ground, it's flying, so that's good. But I still do speak quite a bit.
Yeah. So you talked about putting all the miles on your car. You were going around speaking as much as you could. I would say at that time, the information wasn't actually as accessible as it is now, as we've been talking about. You didn't have necessarily all of the digital resources to point people to. This is right. I would never have thought this in hindsight, but Fred and I were just talking the other day. The iPhone came out in 2007, and I don't know. It's just been such a large part of I guess lives and culture that I thought it was longer ago than that. But the point is, you did what you had to sort of grow your business and get in front of people. And what was the demand like? I know you said, real estate was cheap, but people probably people that were experienced investors may have taken a hit, and so I imagine that was a hard time to sort of talk to people about this and sort of tell them the benefits, probably in a lot of ways like now, yeah. But what sort of challenges did you face?
Well, people were looking for hope. I mean, a lot of people did have lots of financial issues, but a lot of people still, maybe they left their job during that time, but they had an employer plan, just like you did, that they could roll over. And at that time, they could take advantage of the downturn and acquire these low-cost properties and build their retirement. Now, along the way, there were some fraudsters out there that had some schemes, and so that's always going to happen anytime there's money. People, the schemers, they call them the bad actors, they're going to show up. There was some of that. I think that was probably the biggest challenge for some people is, we're the bad actors. That was a big challenge. But I think too that during those years, like 2007, 9, even 11, banks weren't really lending. You couldn't just get a loan, and it's usually been that you could get 10 mortgage loans, right? 10 loans.
Mm-hmm. Yep.
Well, at that time it was maybe 6, maybe fewer. And so investors, how are they going to have the capital? And then that's, as a whole, real estate investors started understanding, wait a minute, I could tap into this $40 trillion pool of money to fund my deal. So they could take someone's retirement account, have it in their deal, and then acquire an asset and then pay the retirement account back. So it was win-win. Capital, grassroots capital came in and improved whole neighborhoods. And those, so the neighborhood was better. Somebody had a nice place to live. Everybody made some money and somebody saved for their retirement. So it could, in some cases, in a lot of cases, it was a huge win for everybody. A couple of bad actors, that's where the fun stories come in. But yeah, so that's what it was like then. And today, what is it like today? Today, I mean, it's always been access to capital. How do I raise capital? How do I get started? How do I find capital for my deals? I don't have a track record, and so I'm not getting money from a bank to do this. How could I invest? I've got this. I found a deal and I want to get into it. You can partner, you can lend, you can get into a deal as a debt or equity partner, and that's what people are looking at doing today.
Yeah, it just comes down to, I guess, finding a good, relatively safe way to put your money to work, regardless of the market cycle. So it's, you started your business in a challenging market cycle, but challenges create opportunities.
Yeah.
We have a long run up, longer than a lot of people anticipated, and now we're in another challenging, and it's just a matter of sort of adapting to whatever that time is. And I feel like I see a lot of capital raisers out there doing a lot of marketing based on self-directed IRAs and the ability for people to access those retirement accounts. And I think it just points to, kind of what's the way to capitalize on potential opportunities. And if in a recession or a downturn, well, the prices might get a little bit better, but capital's harder to find. So you have to look at, other avenues to get that capital to work. And oftentimes, people have, especially retail investors, they might have an old 401k or IRA that they frankly haven't even thought about, right? It's just been kind of sitting there, after they left an employer and don't know that they could put it to work in a different way. So I think it's a very valuable service to have, and important to I guess raise awareness that it's available.
And we were talking about what's timely and what is the market conditions that made me think too about cryptocurrency. Your IRA can invest in cryptocurrency because we've got some currency issues going on. Digital currency, Fed now. So a lot of people are getting into, more into crypto. That's, you can do that through uDirect. And also precious metals. Precious metals are really increasing in popularity. So buying actual silver, gold, palladium, platinum, and then we store that for the IRA. There's a small storage fee, and the IRA owns hard metal, not just certificated metal, but actual metal that's stored at a depository. So those are two asset classes that are also gaining in popularity these days because of, currency and what's the future of that. There's always value in gold, I suppose, and gold's always been a hedge against inflation. So anyway, that's something that's timely.
Yeah, no, that's a great point too. What about any legislation or anything? Do you see? There's always, I feel like I have no intention of being political or anything like that, but you always hear with political cycles, there's, here's some new rules that might be coming out. And oftentimes there's a lot of talk about it and then it doesn't pass, or, you know what I mean? So and anything related to these self-directed IRA accounts that you're seeing, or the retirement industry in general?
Yeah, you're right. A lot of times with these rules or these proposals, it is hurry up and wait. But what's actually passed is in 2019, there was something called the Secure Act 1.0. And when it passed, one of the things it did is it increased the RMD age, so our required minimum distribution. So when you have an IRA, you have to take the money out, the pre-tax money, like the traditional and the SEP money, the simple IRAs. You have to take a certain percentage out every year after you hit a certain age. And so that age for a very long time was 70 and a half. And the government starts to realize, oh, wait a minute, people are living longer. 70 and a half, that's not old as it used to be. So let's raise that age. So the Secure Act 1.0 raised that age from 70 and a half to 72. And then at the end of 2022, like on the very last day of the year last year, Secure Act 2.0 came into effect, and it changed a few things. It also changed the RMD age from 72 to 73. And it said that in 10 years, so in the year 2033, that RMD age will go up to 75. And that's great because if you're that, that age and you don't need the money, you don't have to take it. Right. If you need it, that's different. You can take it and there you go. And you're required to take a certain amount. There's a chart on the IRS's website that tells you, you multiply the amount times your age and you get a factor, and that chart's on the IRS's website. But again, so, this is what we're looking at is the government realizing, hey, we live longer, we're going to need that money longer. But Secure Act 2.0 did something else that's pretty cool. And with the SEP IRA, which is a Simplified Employee Pension, SEP, and the Simple IRA, which is a Savings Incentive Match Plan for employers, these two employer IRAs, the contributions have always been pre-tax. So you contribute and get a tax deduction for that, assuming that you qualify. But now with Secure Act 2.0, it says that we're going to be allowed to make Roth type contributions to those two accounts, something we haven't been able to do before. However, the Department of Treasury still hasn't come up with any guidelines, no prototypes, no, this is how you do it, this is how you implement it, this is what percentage of Roth money can go in. We just don't have any guidelines or guidance from the Department of Treasury for this rule that passed really January 1st. And here it is, well past mid-year. Yeah. So we're waiting for that. But that's something new it's not just an idea. This is something that's really happened. Although with the Roth contributions for the SEP and the Simple, we're waiting for implementation.
That's actually, I didn't know that. And that is important information in large part because my business, we do a SEP IRA. So I wasn't aware of that. So that's I'll be on the lookout for that.
Stay tuned to our blog for an article as soon as we get some guidance.
Yeah, that's awesome. So and anybody else who has, even the Simple IRA, that's important information to kind of understand that and can be pretty impactful. So great to know. Thank you for that. Kaaren, I want to switch gears and just get to ask you the questions I ask every guest.
Okay.
Just before I let you go today. The first one, it's related to the name of the show being Know Your Why. And so I always ask every guest, kind of what's your why? What drives you? You've obviously had a very successful career. What kind of keeps you going and in that sort of growth mode?
I guess it's because Americans as a whole just are not ready to retire. I don't think if you ask anybody, how much are you going to need to retire? It's something that we like to just put our head in the sand about, like, oh, I'm never going to retire, or that's way off. But guess what? It's coming at you like a freight train. I promise. So you need to get ready. So because people aren't prepared, I am very passionate about teaching about retirement savings so that people do get prepared. And it's not just IRAs. It's Social Security, it's insurance, it's savings, it's the assets that you acquire personally or within the IRA, whole layers and layers and layers of assets that are going to provide streams of income to you at retirement so that you are ready. You don't want to be one of those people, in the line at the grocery store buying one banana because that's all the money you have. You want to be wealthy and you want to be comfortable in retirement. This is how to get here. One of the tools in your tool belt to use to get to a really prosperous retirement. And I'm passionate about teaching that.
It is so important. It is. Sometimes you see those statistics of what people have, what the average American has for retirement, and it's scary. It's also scary when you do the math and figure out how much you should have for retirement, and if you're not already on that road. There's a lot of it's hard stuff to talk about. So I think that's a lot of times why people maybe do avoid the topic. They do put their head in the sand. But I think it's really important to not just, as you mentioned before, like we're living longer. So it's not even the same, or it shouldn't be the same equation as it used to be. It's not, there's a lot of things that are changing in our health and our longevity is expected only to get better. So it's like you don't want to necessarily be working until you're 90. And so you've got to, figure out what's going to set me up for success like later in life.
Yeah, well, if you want to take action right now, do something right now for your listeners, go out and make a contribution to your retirement account today. Write a check, pay yourself instead of the IRS, just like you were saying. You made a contribution, you got a tax deduction. So instead of paying taxes, you put the money toward savings. I mean, it's not a dollar for dollar deduction, but talk to your tax advisor and say, hey, what's the best contribution? What's the best account for me? And how much am I, eligible to contribute? And do that today. Make that an action item. Take small steps towards saving for retirement. And that is a very, very doable step to save. You don't have to maybe make the whole contribution, but, make some contribution.
Right. Yeah. And I love that action step. I'd also say just take action on sort of learning your options, learning what you need to do to sort of improve this process. And I can tell you, as I said before, it's not whatever's happening through your employer is not enough. It's not even necessarily with your best interests in mind. It's kind of a large scale one-stop shop type of solution that just it doesn't fit everybody. So it doesn't it's not the best option that you have. So great point. Tell us something about yourself that isn't common knowledge, special skill, a hobby, anything, just to let the listeners know you better.
Well, like I said, I used to be on the radio. I did Light Rock, Let's Talk, K-Light, 98.7 FM.
That's
and a few others. Yeah, so that was fun. It's when I was in my 20s and I had a great time. So
yeah. I'm sure that helped with all the speaking that you did when you were building your business, going out and having all these conversations with folks. You're used to being the voice, so that's a good
speaking to thousands of people at a time now.
Right.
So right,
yeah,
and so I suppose that would be it.
Okay. When people hear this and they want to reach out to you, what's the best way?
Email us at info@udirectira.com, and we will get right back with you. And tell us, hey, I want to learn more about whatever you want to learn more about. And there are rules. We haven't really gone deep into the rules. So, hey, what are the rules of self-directed investing? How can I learn more? Can you send me some videos? We have a YouTube channel. We have a Facebook channel and an Instagram. And we're always teaching different, FAQs about self-directed retirement savings. Okay.
We'll put that in the show notes so people have that, can find that easily.
Awesome.
Final question for you, Kaaren. What advice would you give to someone who, and you can kind of take this in whatever direction. Usually I say in people who want to get started in real estate, but maybe take it towards what would you do, if you want to get started in building for your retirement, kind of really focusing on those topics.
Yeah, I do the math, start by doing the math and take a look at, where do you want to be living? What will your nest egg look like? And talk to experts, talk to financial planners, and start developing a plan with a professional. Self-directed IRAs are one way to augment what a financial planner will put you into, because they'll put you into market correlated assets. A self-directed IRA is non-market correlated assets, but they'll also help you with other things like annuities if you like them, and insurance if you like it, and different vehicles. So start doing the math, talk to professionals, talk to your friends. Hey, how are you? Start that conversation with your friends. I know it's not really like a fun topic maybe to talk about, but it can be like, what are you doing to retire and to get ready for it, and have that conversation and hold each other accountable.
Yeah, that's great advice. I think it is unfortunate for whatever reason, it's not something that people are comfortable talking about, despite it being such like an incredibly important topic for your future. So I think that's great. Kaaren, thank you so much for coming on the show today.
Thank you.
I've learned a lot. I'm sure the listeners will learn a lot. So thank you for taking the time out and coming to talk to us today.
Really appreciate it. Thank you.
Yeah. And folks listening, I know you're going to get a ton of value. Definitely check out Kaaren's website and everything we've got in the show notes. And please rate, and review the show so we can get more phenomenal guests like Kaaren. Thank you all for listening.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.